ASML stock is down over 8% after beating on their earnings report. However, they did slash their growth rate for 2026, in which they reported $8.95 billion of revenue versus $8.73 billion expected on the revenue. And then on the net income, they reported about $2.66 billion versus $2.37 billion expected by analysts. So on this quarter, they actually beat on both the top and bottom line of revenue and their net income. However, they did say that they are expecting potentially no growth for 2026 because of the tariff war and the uncertainty going forward. However, even with the uncertainty going ahead in the future, for 2025, they still expect about 15% revenue growth, which is still pretty good. In which the CEO said that looking at 2026, we see that our AI customers' fundamentals remain very strong. However, at the same time, we continue to see increasing uncertainty driven by microeconomic and geopolitical developments. Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage. So, with that being said, ASML is not expecting huge growth in 2026, mainly because of the huge economic uncertainty with tariffs. And even though right now their machines are actually tariff exempt, we don't know about the future in which maybe they become tariffed and then they're going to be having no growth in the future. And also another good news though for ASML is that in China they allowed Nvidia to be selling to China, in which ASML could have even more growth because of the demand for their machines, in which ASML creates these EUV lithography machines. If you don't know what they are, they actually imprint patterns into chips to make them more precise and better, in which they're the only company that actually makes these machines, so they have a very big moat and competitive advantage compared to other companies. Even though other companies have tried to replicate this machine, they're the only one that's actually really done it well. In which each new machine has costed over $400 million for their customers to purchase. So they're not selling a whole lot of machines, it's just they're very expensive. In which they also service these machines, but this is why ASML has a pretty hard time having consistent growth rates in their net income and free cash flow, just because of how the business is and how they actually earn their money and the accounting side of this business. So with this being said, with this huge decline in stock price down over 8%, I'm going to be taking a look at the financial health of ASML and then using my intrinsic value calculator to see if this is a good time to buy ASML today. The first two metrics that I'm going to be looking at for ASML have to do with the valuation of the company, in which I like to look at the trailing P ratio and the forward P ratio, which is this the price of the stock divided by the earnings per share. And this gives us a good idea of the valuation it is compared to other companies and compared to itself in the past. And for the trailing P ratio, I just want this to be positive, meaning the company is a profitable company, and clearly ASML is a profitable company with a trailing P ratio of about 31.17. But this does look a little bit high compared to the stock market, which trades at about a 25 P ratio right now. But it does make sense because of the competitive advantage ASML has and just because of the industry they're in. So I'm not too worried about that. Now at the forward P ratio, I want this less than 30. And as we can see here, it is just less than 30 at 28.82, in which in the forward P ratio, the difference between these two is that the trailing P ratio is the earnings per share over the past 12 months, and the forward P ratio is the earnings per share in the next 12 months. So with the forward-looking valuation, it still looks pretty decent at a 28 P ratio, meaning right now you're going to be paying about $28 for $1 of earnings for the future earnings. So right now, ASML's valuation doesn't look too bad, especially with the growth of the company. Now taking a look at ASML's revenue growth rate, I want this to be greater than 5%. As we can see here, ASML's growth rate has been growing at a very consistent rate and at a pretty fast one too, especially for the size of the company. It's been growing at about 15 or so percent over the past 5 years, so this looks like a check mark for ASML, and their sales growth is continuing to grow over time. So I really like this. Next, I'm going to take a look at the net income of ASML, and I also want this to be growing at a greater than 5% rate. And as we can see here, it is definitely growing at greater than 5%, and it's growing at about a 20% annualized return. So this looks very fast for ASML and is faster than the revenue growth rate because their profit margins have been increasing over time, which we also like to see from ASML. So this looks very good for ASML, and I really like this growth rate out of this company. Now I like to take a look at the shares outstanding of ASML, in which I want them to be buying back shares, which means it is decreasing over time. If it decreases over time, that means us investors will have more earnings per share. Since there's going to be less shares outstanding, you're going to own more of the company percentage-wise. So as we see here, they are decreasing over time, and they're buying back at a pretty good rate, in which they bought back a lot in 2022, which I don't know about that decision because I'm pretty sure the stock was pretty high during this time, but I'm not 100% sure. But nonetheless, they are buying back at about a 1% rate each year, so this looks pretty good for ASML, and I like buybacks. Now taking a look at the balance sheet of ASML, I want to see a total debt to equity ratio less than 50%. Which means that they have less than half the amount of debt compared to their equity. And as we can see here, they have a 21% total debt to equity ratio, which shows us they have about 5 times more equity than their debt. So this looks like a pretty good debt to equity situation. And also taking a look at the total cash, they have $9 billion in cash, while the total debt is only $3.6 billion, which they have no net debt, meaning they could pay this off right now if they really wanted to. So this balance sheet looks very good for ASML, and looks like their debt situation is definitely under control, and it's pretty unlikely for them to go bankrupt. The last metric that I like to look at is the analyst expectations for their growth rate. And as we can see here, they're expecting them to grow at about 17.4% over the next 5 years. So this is faster than 5%, which I wanted. So this is a very good rate for ASML and shows us in the future the company is very likely to be growing continuously. So this is really good out of ASML, and I really like all the things this company is doing, in which they've beaten on every metric, and I just like this company so much, and I also own it. Now, with that being said, I'm going to be using my intrinsic value calculator to determine the fair value price I believe ASML should be and if we should buy the stock today. So the first thing I have to do is the future revenue growth rate over the next 10 years, in which I think they're going to be growing at about a 12% rate each year. Analysts expect them to grow about 17% earnings, and also the companies expect them to grow at about over 15% each year. So this looks like a fair and reasonable growth rate, also because of the huge competitive advantage they have with these lithography machines. I think that they can grow at about 12% each year. Now for the future profit margin. Taking a look at ASML's profit margin right now, they're at about a 28% net profit margin. However, I do believe that in the future we could potentially see this decline because of competitors potentially starting to make these machines, in which they would have to lower prices a little bit. The one thing I don't like about ASML is why they don't have more pricing power. I feel like they should be charging more and more money for these machines, in which they would make even more profit, because they're the only people that make these machines. So that's the only thing I don't like about this company. But nonetheless, I think that a fair profit margin in the future could be 27%, since it's at about 28% right now. Now for the future P ratio. The stock market trades at about a 25 P ratio, and ASML trades at about 30 right now. So I believe that ASML is pretty much a market average company, in which I think a fair PE ratio could be 25. So putting in a 25 P ratio, I get a future market cap of almost $700 billion. Now for the shares outstanding. I think they're going to buy back about 1% each year, which they've been doing basically every year for the past so many years. So with this being said, I get a fair value price of ASML at about what it is today, in which I think the future share price for ASML will be $1,944 in the next 10 years. If you bought this today, I think you can make a greater than 15% return on your investment each year, in which I'm probably going to be buying more for my position, in which I really like ASML and just the moat of this company, and the financial health of ASML is just almost unmatchable. So I really like this company, and thank you guys for watching this video on ASML. Please hit the like button, comment down below what stocks you want me to analyze next, and subscribe.